Good morning, everybody. This is Henry. It is the 14th of August 2009 and it is 8:15 a.m. What we're waiting for is the US core CPI number, and that is going to be released at 8:30, 15 minutes from now. Basically, the forecast for this core CPI number is 0.1%, and the previous release number is 0.2%. What we're going to be looking for is at least a 0.2% of deviation, meaning that if we get a 0.3% or a negative 0.1%, we should see the market react with a lot of volatility, and that will be our cue for entry. The CPI is also known as the Consumer Price Index or Consumer Price Inflation. It is the direct measurement of inflation. So when you hear people talk about the inflation levels, they're actually talking about this number, CPI. So it is a very, very important news release, and we're going to be looking at the exact core number. And the core number is basically excluding energy and food. And because they do vary for different seasons, especially during winters, you have a high consumption of energy. So most traders and investors look at the core number instead of the headline number, which includes everything. Now this number, as I said, is pretty important, and if we are seeing a steady trend of an increase on this number, it could lead to measurements from the Federal Reserve to increase interest rate in order to curb the higher inflation. Right now we know that the Fed is not going to be raising interest rate anytime soon, but if we do get a sudden spike up of this number, definitely it will be good for the US dollar, and it will be considered as a sign of recovery. So a lot of traders are looking at this number. Right now I think there's slight expectation of seeing this number higher, and even if the number would remain lower, it wouldn't be necessarily bad for the US dollar, at least not for the time being. So there's a lot of mixed feelings over it. So what we need to do is we need to wait for the number to come out, and after the number comes out, we'll wait for the market to react first, and then we do what we always do, wait for a retracement, and then we'll jump into the market. But because the reaction from this news release could be difficult to predict at this moment, we're going to keep a very open and flexible stance over this news, and we might not necessarily getting a trade, but it's always good to be prepared for it. So right now it's 8:19 a.m. We're looking about 11 minutes for this news release. We'll wait for the market to come out. We'll look at this number live. Alright, thank you very much.
Expected minus 0.2% for June, and new motor vehicle sales month-on-month expected minus 1.0% for June in Canada. And US July CPI month-on-month expected 0.0% and core expected 0.1%.
Less than a minute now for the news release, so stand by.
July CPI data and the Canadian data should be out in just a few seconds. CPI 0.0 is in line with expectation. Core 0.1% also in line for month-over-month. Year-over-year minus 2.1% is 0.2 lower than expected, and core 1.5%, 1/10 lower than expected. The NSA at 215 spot 351. No revision to prior CPI data, and Canada manufacturing sales month-over-month 1.9% above the minus 0.2% expected prior rise, higher to minus 4.9% from minus 6%. New motor vehicle sales in Canada minus 0.6%. It's 0.4 higher than expected prior rise, 1/10 higher to 1.1%.
Cheering Plow SGP announcing FDA approval for.
Okay, we have in line with the expectation number. Not much of a market reaction. Saw some initial market reaction. Actually, we're seeing some very limited market reaction over this one. Since we got inline, there's going to be a no trade, automatically a no trade, because there's nothing we can do with this number to take advantage of market volatility. However, I'm seeing the yen getting stronger. Dollar yen just lost about 15 pips. But I'll just chalk it to market volatility for the time being. I see a dollar getting a little bit weaker, but aside from that, not too much of a market reaction. Yen is getting stronger. Guess that's because the headline number came out at 0.0, but that's also in line with the expectation. Year over year number is negative 2.1%. It was expected at the negative 1.9. Core number year to year 1.5 versus 1.6. No revisions. And last month, July's core number is 0.1 versus 0.1. So really not much we can do. Seeing some kind of a strength with the Japanese yen, but I think that's just some volatility at this moment. It's really not a indication of anything. So what I'll do is I will stick around for another 30 minutes, maybe an hour, to look at the opening levels of US equity market. And if there's really nothing to do, then we'll just call it a week. But for the meantime, this is a no trade.